I made this point here before. This big AI boom that people are talking about, there's really only two companies, maybe until recently, that were really seeing any upside at all. It was Nvidia and Broadcom. That's it. And if you sort of think through the potential evolution of this market as we go forward, you've got Nvidia, who kind of owns the GPUs, and the natural second source, it's really looking like it is probably going to be these custom ASICs. As the hyperscalers start to build out their own internal infrastructure, and Broadcom's the 800-pound gorilla there. So, I mean, I still think these two guys are the natural AI winners, and for Broadcom, it really is becoming more and more apparent. I mean, this print, if you believe their numbers, this was almost kind of like their Nvidia moment. Like Nvidia had their Nvidia moment like last year, kind of middle of the year, May. This may be like Broadcom's Nvidia moment, so to speak.
According to market analysts, Nvidia is on a rising trajectory and may eventually surpass Apple in terms of market value. The Danish bank thinks the company may hit $250 per share due to the strong demand for Nvidia's newest Blackwell processor, which uses 25 times less energy than the H100. Nvidia's market value would treble to $6.2 trillion if it could fulfill that promise. An insatiable demand for Nvidia's cutting-edge chips has been fueled by the rising cost of electricity to run data centers, which is intensifying the AI arms race and making the business the most profitable in history. Sales are expected to increase from $60.9 billion in fiscal 2024 to $195 billion in fiscal 2026, resulting in higher earnings per share. Furthermore, Nvidia has a stronger hold on AI than competitors like Apple thanks to its graphics chips, which power 90% of AI systems, and the Omniverse platform, which it sells to enterprises. With a 36 of 43 rating and 31 times anticipated profits, analysts recommend Nvidia as a strong buy with a 25% upside potential. With such a promising growth trajectory, Nvidia is well positioned to continue its rise in 2025, upending the IT industry and changing the way AI innovation is developed. Nvidia shares seem to be down 2.5% on Friday due to market worries over valuation and outside threats. However, they claimed that since Nvidia's stock had increased to high valuations after a successful performance earlier in the year, profit-taking was a major factor. The action comes after investors became more cautious about tech sector valuations as scrutiny grew. Market mood also revealed uncertainty around U.S. export limitations on high-performance semiconductor chips to China, a significant market for Nvidia's expansion. Although there were no fresh regulatory announcements, the market is still declining due to geopolitical pressure that is undermining investor motivation. For investors, the situation became even more complicated due to competitive challenges in the artificial intelligence (AI) chip industry. Experts question if Nvidia has what it takes to maintain its leadership position as rivals boost up their efforts to acquire a piece of this expanding industry. Despite these problems, trading volumes are still modest in comparison to a shrinking, which may be a short-term setback rather than a long-term shift. The performance also demonstrated the fine line between investor confidence regarding its leadership in semiconductors and artificial intelligence and the concerns associated with competition, regulation, and valuation in important industries. The global market for AI hardware was estimated by Research and Markets to be worth $130.86 billion in the current year. By 2029, it is anticipated to have grown to $191.03 billion at a compound annual growth rate of 7.86%. The development of artificial intelligence in notebooks and personal computers has been a major driver of the computer hardware market. An estimated 48 million AI PCs, or 18% of all PC shipments, are anticipated to be deployed in 2024. According to a report released by Canalys on March 18. According to the survey, AI PC shipments are predicted to surpass 100 million next year, making up over 40% of all PC shipments, indicating that this is only the start of a significant industry shift. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
What do you think about some of the names that have been in the news this week? I mean, Nvidia is always in the news. We had Broadcom, we have Marvell at new highs. We were talking about Taiwan Semi today. When you think of the different names, are some standouts to you that you would consider investing in or you like to watch, for example?
We still think Nvidia is a very strong player and maybe a very dominant player in the infrastructure space. But I have to mention that they had a pretty good earning this past quarter, but the market was disappointed. And that's what we're worried about because we think the expectations may be too high. And again, if you look at a similar companies within the same sector, right? Qualcomm, Broadcom, these infrastructure, even Oracle itself that provides the infrastructure around AQ, we think those will be very strong names going to 2025 because the large companies like Google and Facebook that have to train these models, they have to expend a capital, the software, the infrastructure to train the models.
The greatest stock to buy at the moment for computer hardware is Nvidia. In the past, the business was renowned for its graphics processing units, GPUs, which revolutionized the gaming market. It is currently a frontrunner in AI infrastructure, with its GPUs powering robots, data centers, and autonomous vehicles. The company's gaming division continues to bring in a healthy profit. In the fiscal third quarter of 2025, it made $3.8 billion from the division, a 15% increase from the previous year. The true game changer, though, is its GPU application in the data center sector. Revenues from data centers increased 112% to $35.1 billion. The segment sales even exceeded the $32.5 billion that management had anticipated. Not only that, but Nvidia has been steadily expanding its range of GPUs to meet the increasing demand for its products in the data center and artificial intelligence sectors. The business announced the Blackwell platform on March 18, which represents a major breakthrough in AI computer technology. The GB200 GPU, one of the most potent processors on the market at the moment, is a part of the Blackwell architecture. Data center revenue grew due to demand for its Blackwell and Hopper platform, with sales of its H200 GPU reaching double-digit billions of dollars. It was the fastest product ramp-up in the company's history, according to management. By manufacturing high-performance graphics processing units, GPUs, Nvidia has established itself as the industry leader in visual computing. The business focuses on four major and expanding markets: professional visualization, gaming, data centers, and automotive. Some of the most intriguing fields of computing, such as data center acceleration, artificial intelligence, AI, machine learning, and autonomous driving, might be led and disrupted by Nvidia's offerings. There were two factors that contributed to the stock's increase throughout the quarter. Initially, the stock benefited from the intense enthusiasm surrounding the advancement of generative AI and the possibility that this would require the acquisition of numerous Nvidia products well into the future. Second, Nvidia demonstrated its dominance in the development of today's accelerated computing infrastructure by posting another impressive beat and raise quarter. The firm increased its F2Q 25 revenue outlook over street estimates. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Well, we did have a failure here for the bulls. Actually, when we started off today's session, we got close to that 60-80 level that we highlighted earlier today and pretty much failed and saw some aggressive selling here, Oliver, for the most part. Now, we are trying to kind of recoup a little bit. We do have some pen risk sitting at 60-50. But today, if you're a bull in this, in this market, it's just kind of tough to try to see some of these, failures, especially when you're looking at some of the mega cap names out there, like Google, which has been on a pretty decent run, but couldn't really catch a bid today. Nvidia, the same has been really compressed right around that $134 level. So we have this little bit of, a little bitty bounce that's taking place right now. Well, what's actually very interesting is we kind of came back down to that channel line here and bounced right off of it. So we did see some buyers stepping in, but it just kind of shows that we don't really have that catalyst right now to really try to push us higher with some conviction. I know everybody's been kind of talking about the lackluster breadth in the market, and we didn't really need breadth, but this is one of those days where you kind of need it. You need some other sectors to really step up when technology and communication services really has not. So that's kind of what we're seeing now. If we do go into the close, there could be a little bit of a squeeze opportunity here if we're able to break above 60.60 in the next, 24 minutes or so. So that could be a shining light for the market. And the only reason why I say that, Oliver, is because at the end of the day, we'll get a new announcement when it comes to the NASDAQ 100 rebalancing, who's going to be put in, who's going to be kicked out. And so sometimes traders like to get ahead of those announcements, and that could actually create a little bit of speculative activity when it comes to the options market.
Even though Nvidia is still without a doubt the most followed tech stock, the fervor surrounding it appears to have subsided in recent weeks. The company's impressive stats are insufficient at this time. It isn't even sufficient to easily surpass the extremely high expectations of Wall Street. Nvidia must completely outperform them if it hopes to make a significant impact. The nearly 8% decline from before it released earnings to December 10 may surprise many investors, but in the grand scheme of things, short-term price swings are not that significant. Looking ahead, where do you think Nvidia's stock will be in 5 years? Perhaps this is old news by now, but it's worth mentioning again. The field of artificial intelligence, AI, is vast, expanding quickly, and is probably going to rule markets for years to come. The technology has enormous potential, and you don't have to fully believe in all of the industry's grandiose claims, of which there are many. According to POC, one of the big four accounting firms, artificial intelligence, AI, might boost the world economy by $15.7 trillion by 2030. It's not simply their chips that put Nvidia at the center of it all. Companies with a clear vision are driving the growth of new industries and helping to demonstrate what is feasible. So far, that firm is Nvidia. For many years, Nvidia has been at the forefront of technology under the direction of its founder and CEO, Jensen Huang. An earnings report doesn't include that kind of intangible. However, tangibles are also important, and Nvidia is still in the lead there. The industry is powered by the company's chips, and there is an unprecedented demand for Blackwell, its most recent incarnation. Nvidia looks ready to maintain the double-digit quarter-over-quarter increase of the previous year with the launch of Blackwell. The forecast that the gross margin would decline marginally over the course of the following year as Nvidia ramps up production of Blackwell was the only significant flaw in its Q3 outlook. The company's CFO said on the earnings call that Nvidia's gross margin, which was an astounding 74.6% last quarter, will temporarily fall to the low 70s before rising back to the mid-70s later in the year. It's evident that things are now going about as well as they could. But Nvidia has significant obstacles as investors look to the future. The question of whether the return on investment is truly worth it still hangs over the sector on a larger scale. Skepticism hasn't disappeared, even though this question doesn't seem as strong as it could have a few months ago, because observers have seen more proof of its practical utility. This year, companies such as Alphabet and Microsoft are investing a record $50 billion in capital expenditures, with the majority of that money going toward AI infrastructure. No one wants to fall behind in the AI arms race that is currently raging in the sector, but the shareholders of these companies can only bear these expenditures for so long before a demonstrable return on investment is demonstrated. Nvidia's financial results will suffer if this spending stops. I believe the industry is still a long way off from the point at which this might actually become a threat. But watch for any change in attitude from these companies' executives. As we zoom in, we see that other chip makers are vying for market share with Nvidia. AMD is the clear no, too, with a new range of chips that nearly compete with Nvidia's offerings, but it's not the only danger. NVDA, the software that runs on top of Nvidia's hardware, is the company's true moat, even though the company's hardware is still the greatest at this moment. Nvidia has established an environment that makes it simpler and more effective to use its products. Even though no one can foresee the future, investors can make educated guesses because a lot can happen in 5 years, particularly in the market. Some roadblocks will occur during the journey. However, I think that Nvidia will continue to outperform the market over the next 5 years because to its position in the market, its technological advantages, and the leadership's vision. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.